Here, today's topic though is important. It's about mileage deduction. It's about cars. It's about business use of it. So a lot of times we have clients would say that, well, Ying, I want to do mileage, and but someone told me that I should deduct my car, and what is the best way to do it? So I kind of want to talk about that today to just kind of give you an idea when you look at your car expenses, what is the first thing you need to determine. Okay, so first of all, let's just cover our regular things, right? And in webinar content we have here is all going to be on our YouTube channel. And if you have not subscribed to our YouTube channel, make sure you do. All right, so let's get going. And remember, for anything we want to deduct, right, you must know it has to be for business. We're talking about business deduction, right? So it is either has to be ordinary business expense or necessary business expense, and both, right? So in IRS code is written quote by quote is ordinary and necessary. But ordinary and necessary, it doesn't mean that it has to be so common and no special cases allowed. That's not true. And the necessary doesn't mean has to be necessary every minute. And so your necessary once a year is not necessary. No, it's not like that. So basically, it's subject to a lot of interpretation. The auditors who audit your book is the one that will decide whether that is ordinary or and necessary. Let's say if his determination or her determination is saying, no, I disallow that because I don't think you need that, then it is up to you to argue the point with the auditor and with the auditor's manager. And if that doesn't work, and with the appeal officer, and then ultimately the tax court. So you do have these layers to go through, and there is no such a thing about you get audited and you have to finish arguing with the auditor. No, the auditor is your first step. You have auditor, auditor's manager, and then above that appeal officer, and then above that it is actually technical service people, and then tax court. So if your case is all the way in tax court, just you keep in mind that it's a public information. So if you are doing some kind of special cases with IRS, just be ready that your name going to be on internet, you're on tax court. All right. So, all right. So I'm going to guide you into a slides that Kat prepared for me. So I'm going through it quickly because we covered that. So I am talking about general guidelines on deduction, right? So ordinary expenses is the one that common and accepted in your trade of business. So if you are a realtor and you have vehicle expenses, is that ordinary? Is that necessary? The answer is yes and yes and yes. So now, like when you deduct your business use of cars, so let's say you have a car, you ultimately has two ways to deduct it. You can literally take your car and put that in your business book, become part of the business asset. Or you can leave the car out on your personal side, saying that you are using personal car for business purposes. These two ways. So when you are doing that, see, on this chart, you can tell that for business purposes, if it is yes, then you go down. So your entire cost of ownership and operation, it is for business purpose. If it is no, and you actually gonna say, okay, whether for a portion of that is the actual expenses or a standard expenses, right? So your car, know that for your car itself, you want to decide whether the car belongs to you or belongs to your business. Maybe you will say that, well, Ying, when I went to the car dealership and they are not even they're not even allow me to buy the car under the business because I need to do a car loan. So they want me to put my name on it. That's okay. That is okay. When you go to the car dealership and you want to borrow money to buy a car for your business, okay, you made a decision, you want to put that car in the business. So what you need to do is you need to put your name and also your business name both on the title. So when you buy that car, so you're going to finance that with your car and your personal guarantee with the car dealership at the same time, because it's under business title. So it will be deducted by, the interest expense and also your car depreciation, everything will come out of the business. What's the benefit to put the car in your business? The benefit to put the car in the business is that you will no longer needing to account for the mileage, right? Of course, I wouldn't say you will not account for the mileage. You do account for mileage. If you put your car under the business title, the car become a business asset. You only count the mileage that for personal use. So let's say that car, you were driving that car to Disneyland. And so that was really for pleasure and you took your kids. So that mileage, you should reimburse the company. However, if company reimburse people by IRS standard rate, then you will reimburse the company back the same way. So in 2022, this tax year, our rate is 58.5 cents per mile, right? So you will reimburse the company, but all the car expenses related is going to go through the company, car insurance and the car maintenance and the car gas cost, and also depreciation and all the title cost. All of these become your business expense, right, folks? Did you hear me saying that? So that is because when you bought the car, you already decided the car belongs to the business. But when you buy a car and you're buying that car for your significant others, you want to surprise them for their birthday, and you bought a car, that is under that person or under your personal name. That car is not a business car, but you happen to use that car for your real estate business. So you drive it around for business, then that car qualifies for mileage. But that car also can qualify for actual expense, whichever way you choose. Actual expense just means that the real expense related to business use. So let's say you say, I am going to do actual expense. This car is not the business vehicle. It is my personal vehicle for business use, but I choose actual method. Fine. So let's say you fix the car for 5,000. Then you have to calculate the business use percentage of the car. So let's say in the whole year, this is your vehicle. You use 50% of that for business, 50% of that for personal, and you choose the actual expense method to deduct the car expense. That means your 5,000 fixing can only be deducted for 2,500, right? Because you only use 25%, 50% of that for your business. But if it is mileage, of course, you're going to just go through the mileage documentation, account for the mileage to deduct. Talking about mileage, I'll tell you, I am in this audit world, representing people for taxpayers audit for, I would not exaggerate, for 25 years, okay? And if you ask me, out of all the audit I represented, is there any time the mileage was not changed? The mileage was agreed by IRS 100%. The answer from me is no, never. That is how difficult for anyone to meet the requirement of the mileage claim for your business. If you claim mileage, if you claim 35,000 a year on the mileage, and you are setting yourself up for an audit, there's never, I have not seen any taxpayer with documentation that really satisfies me already when I was doing the tax return, still fails. And there's one example we failed, and actually we are the one prepared the tax return. The taxpayer is the real estate agent. So what she has on the mileage log is the actual house that she showed. Actual house she showed, and from this real estate journal that she has from her brokerage firm, and coupled with her own notes on what to do. So you have the date, you have the house address, you have the beginning stop, beginning mileage, you have the beginning of the starting point, ending point, and then you have the mileage. So you add them up, you claim them. But what failed that audit on this one, I say failed is not like they totally disallowed, they just disallowed a portion of it. But the reason they disallowed the portion of it is because on the mileage, on the request for mileage question from the IRS, they ask for the odometer reading, which is the, when you change oil, they will write down the mileage in the car. So what the auditor looking is, they want to see the beginning of the mileage in the car from the third party reader to the end of the year of the reader, and to be, this amount should be bigger than what you claimed in total. And apparently, you know, our client had 2 cars. So it wasn't really, one of the car is no longer available, so we can't really track on the other car, but this particular car didn't have enough mileage to cover all the claimed. So we, you know, as a result, the auditor could only allow what's showed between the odometer for that one car, right? Because you have no proof of the other side. So this is where, when you are getting into, okay, the car is mine, I'm going to drive it for business purposes, and my actual expense is too much trouble, and the mileage is great. I have this all documented, and I can prove I did drive that. I knew you can prove it. You know, I have not seen my tax preparers and the cheating and the lying out of blue. Nobody does that in what we dealing with. Okay, so folks do good things, and they write down what they do. But the thing is, you need to meet all the requirements when you get audited for that mileage. So I began to tell folks that, you know what, you know, make sure that if you are the kind of person, always do all your change yourself. You never go to a third party, and you know, there's nobody track your mileage. If you are that kind of taxpayer, you want to take a picture of your odometer now in the beginning of the year, and make sure that when you take that picture, you have the date. Somehow there will be computer generated date for you, so that could show that that's on January. In January, you got this mileage. Then at the end of the year, you take another picture, put that in your file, give that to your tax preparer, right? Tell your tax preparer that, hey, you know, this is my odometer reading, this is my total mileage, and then I think you'll be the first one pass IRS audit on mileage claim clean. Okay, so with that, I want to make sure that you know, if you have the car title on yourself and you use the car for a business reason, for business claim, and you have 2 routes to do it, actual and the mileage. If you do mileage, I already told you the story, and you really should know what you needed. And if it is actual, you need to keep your receipts. Okay, any relevant information to demonstrate your cost of driving, like the gas mile, the gas receipts, and you repair your receipts. Then also when you file the taxes, your preparer will ask you percentage of business use. That would be really important. Okay, so these are the things I want to make sure that you understand. This is what you need to do for your mileage claim and actual cost claim if the car is under your name. Okay, under your name just means that the title is under you. It's not under the business. So if, you know, the other way I was telling you is to move the car, to add the car title and with your business name on it. So that will make the car a business asset. When you make the car a business asset, you probably have two questions for me. You will say that, Ying, I can do that, but what if I put my business name on the car title and my insurance is gonna go up? The insurance people are gonna go, oh, that's a business car, so the premium gonna be high. And I will say that when you add the business name on your car title, your insurance agent would have to know who is driving it. It is true if you have a 30 people company and you have a company vehicle that any of these 30 people are going to drive it, your insurance on that car will be really high because it needs to cover all kind of drivers. But if you just yourself, you're the only business owner employee in your company, and you put the car on the business title, you're the only one driving it, your insurance should equal to whether this car is your personal car or not. The only difference, it might be the umbrella insurance that you have with your home insurance. It probably doesn't reach out to this particular car insurance, but you obviously can request your agent to extend your umbrella insurance to cover this car as well. That would not be a huge premium difference, right? So insurance is not a concern. It is also not an excuse for not having that not having your business name under your car title. So that would be one issue often brought up because of, oh, I want the car to be under my business name, but I'm so worried about the insurance going to be too expensive. So I eliminate that concern for you. The other concern is if you put the car under the company name with your name, if the car get totaled, the insurance company was writing you a check. Know that the check would be under both you and the company's name. If you happen close the company and the company account is no longer anywhere, then you will have to go back to the insurance company to have them reissue a check for you. So this is where you want to be aware of. If the car get totaled, the money got back in, then you would deposit on the company because we have kept your cars as company asset. So we need to write off your asset, increase your cash receipts in order to keep your balance book balanced, right? So that is where the two rather significant differences in terms of the car is mine versus whether the car belongs to the company. So having said that, I do want to show you mileage log tracker. It is a really simple screen, and I just want to share that with you. If you could just bear with me and I switch that over really quick, right here. See on here, this is the mileage log. I want to give that to you. Of course, you can make it any way you want it, but I want to make sure that you must have the date when you have the travel, and you must have the trip purpose. It has to be business related, right? And the beginning mileage, ending mileage, and the total miles, and the business and the personal. So they want you to check on that. If it is all business, of course it's in business, but beginning miles and ending miles, this is meant to make you track your odometers reading, okay? And you want to make sure that you write down your house address or wherever you go, write down the purpose. So this is really, really key. And I mean, like I told you, out of 25 years experience in audit world, I have not seen anyone walk away from standard mileage without being dinged for one thing or another. So I do have so many years ago, an older lady who is traveling nurse, he does the blood draws for the insurance stuff. So he's an older lady and do nothing, just that kind of things traveling around. So she has a mileage claim, which is absolutely appropriate. But the thing is, she put all her mileage on the calendar. So she has this calendar book with the squares on each day. So she will write which patient she went And then, the mileage that she thinks, so she write on those boxes. And I remember, this is so many years ago, maybe 15 years ago. So what I did is I actually ended up showing the auditor the real calendar. So I just showed the auditor that she didn't use computer. She doesn't do mileage log, but she has this squares, write down. And our auditor was so kind, was actually agreed with the mileage that she claimed on these calendars, agreed. However, the calendars, she wasn't consistent. So there will be month she didn't have anything, even though she actually have activities, but she didn't really book them. Then those are taking out because, obviously you are not consistent. But just to say that, number one, auditors are all different and it depends on who you meet. And number two, and if you don't have proof and they don't have any reason to let you deduct. In fact, their job is to not allow you to deduct it if you don't have proof. That's why they come to audit you, and they don't audit everybody. They just sample people out, right? You happen to be the lucky one and get audited. And they use those sampling to decide whether the compliance is really vastly okay or not okay. If it is not okay, maybe they would change the rules because obviously certain rules doesn't fit anymore, like home office. I mean, with the internet, with today's state, and what about home office? Everybody working at home, but not everybody can deduct it, right? So I would expect something like that. It would change with technology. So again, and giving you ideas on what you need to know and expect. I hope that this opens your eyes in terms of how you want to deduct business car related expense. And our time is up, and I really want to thank you for being with me. And I hope I did provide you some valuable thoughts, right? So you are actually thinking, oh yeah, let's see, maybe next time when I buy cars, I will put my business name on the car title so that I will do actual claim. Then don't forget depreciation, folks. And don't forget your professional CPAs who are here, like Community CPA, and we're here to help you. So I hope to continue seeing you showing up on our webinars. If this is the first time you see me, my name is Ying, and I welcome you to Community CPA. And I'll talk to you again on Saturday.